Well, guys, I'm disappointed. The NASDAQ was down 3.7% at one point today and only finished down 2.18%. This is our wonderful heat map. This is your Christmas rally, Jim Cramer. Is it Bizarro World where now the red is good and the green is bad for people? It's a Christmas rally for me.
Today was the day that Jim Cramer said it was going to all change.
Listen, guys, it's just proof that we don't know what's going to happen on any given day, any given month, any given week. It's just all pure speculation. That's why on this channel, we discuss value long term. We don't want you to sit there and guess and do this. Listen, I had some short options on Tesla. They made a killing very quickly. I exited them, and then today it went down even further. I was like, son of a gun. And so it was like, okay, that's what happens. You know, did I have like FOMO in that regard? I sure did. But I made a good buck on Tesla. I'm going to move on from that and go to the next thing. And this is all part of a cycle, guys. I mean, you see big names here. I mean, Google.
Look at the biggest four up there: Apple, Microsoft, Amazon, Tesla.
Let me get some. Let's get the green.
Berkshire B.
I mean, look at Google here. Look at Apple. Look at Microsoft. Berkshire.
And look in that corner. Exxon and Chevron. Remember we were saying that, oil's going to rally now because something happened somewhere with OPEC and this and that. And look where we are.
Yeah. So, guys, that's the thing. You've got to remember that this stuff takes time. This year has been a tough year for a lot of people. We want you to shift your thinking from, oh my God, this is bad, to, oh, thank God I have so much time till retirement, I can go buy stocks at cheaper prices. Does that mean I'm endorsing stocks stay at these values? No. However, with that said, I'm never going to tell you when or not to buy. I will just tell you dollar cost average, learn a process if you want to buy individual stocks and take a portion of your portfolio. And over time, if you get very confident in your abilities to throw FOMO to the side and not get as emotional when these things happen, like these days make me happy. They really do. I'm sorry to say that. And people, I don't want you to look at me and say, you're a jerk. We all lost money. It's like, well, guys, I'm preaching on this channel for 2 years about how overpriced things are.
Yeah, I mean, and when stocks were going up, that was a really fun time for everybody to ride the wave up. And just as irrational as they went up, they can come down. And we're seeing that today. I'm looking at Tesla, for example. Guys, I even said this on my Instagram recently. Tesla's fall in the past couple of weeks has been absolutely ridiculous. There is no way that you can say that this company, should Tesla have fall to these levels? Yes, I do believe that. Do I believe that this thing should fall from, what was this, $320 a share in October to today, $125? No, that's absolutely absurd. Even from December 1st, call it, to December 22nd today, that is a massive fall from $200 to $125. It's irrational. But just as irrational as that is, so is this. People weren't saying, this is crazy. This is crazy. Well, this is crazy too. You have to be able to balance it out and look at it from both perspectives.
And that's the thing. It's like when people see stocks, it's like, I hear all these people now where they're suing for crypto. They sue in the real estate crisis. They didn't ask questions when things were going well. Yeah. When the results were good, they didn't question the process. The results were bad, they questioned the process. No. Guys got to question the process. Now, this is our updated stock market to GDP ratio that I created going back to 1929 using the S&P metric. We're still, after today, 60.3% overpriced. Still. After that. Now, I will say one thing. GDP, they just announced that GDP came up higher for the third quarter. So this is probably going to go a little bit higher, and I'll update that once I see the number. But guys, we're still overvalued by a lot, 60%. Forget about this market. Go back to the last time we were overvalued 60% or close to it. Back in 2000, 99, 2000, we never got to 60%. So we're still higher today than we were at the start of the dot-com bubble. And look at the returns for the next 10 years. This is no coincidence. Yep. The more you pay for something, the less your return. The less you pay for something, the more your return.
And this is overpriced by 60% with a 20% pullback on the S&P this year.
Yeah. So it's still tough. Now, guess what, guys? Am I sitting there saying I'm going to wait till the market is exactly? No, I'm not waiting for the market to get exactly where it needs to be.
Plus, you couldn't do that.
Right. You can't ever do that. But what I'm trying to wait for is I can accept 15, 20% overvalued. Even 25. I can be like, okay, There's some reasonable, I can find some really good value. Some things have been beaten up way too much. Yep. Great, but it's 60% overvalued. I personally have a hard time seeing how it doesn't end up being painful for everything. Not just a few things. It's like for everything. Now, there are some stocks that are down a ton more than other ones. Could those rebound? The ones that have good fundamentals? Sure. BABA, Meta. I don't know what's going to happen with them, but I'm going to wait and be patient and buy those stocks at prices that make a lot of sense to me. Right?
Yeah, and it will be a lot of, as that number trickles down, there's going to be more pain, because remember what that is. Those are companies. And as companies start to lose value, they get scared, they start layoffs. And this is just a big spiral effect. Eventually, there's going to be a good time to buy, and people are going to start hiring again, and we're going to get back to where we are now.
But your job as an investor, repeat over and over, is to figure out where normal times are and buy based on those, knowing full well that you're not going to buy at the bottom, you're not going to sell at the top. Your job is just to keep buying as it goes down, dollar cost average, along the way, especially in ETFs. But if you want to buy individual companies, same thing has to happen. You got a dollar cost average along the way. And that's the big part about all this investing stuff. That's the hard part, is sitting there saying, I'm okay buying and seeing a stock go down further.
We had a long conversation about Micron today. Micron's sitting at about a little under $50, whatever it is right now. But we're saying, oh, well, maybe this is a good time to enter. But 35 also sounds really good. What's dollar cost average on the way down?
Yeah. And it could go to 35, I don't know where it's going to go.
Go to 25.
It could never go to 45 ever. And it all of a sudden skyrockets from here because something happens. The point is, we're sitting there. We have a process. The process works over the long run. In the short run, it can be a little murky, and that's fine by me. My world opened up when I heard the words that when I buy a stock, I'm buying a piece of the business. All of a sudden, I went from I'm buying a ticker symbol to I'm buying a set of cash flow. And I asked myself 3 questions now before I buy a stock. Question number 1, do I think this company will be around for the foreseeable future? If the answer is yes, I go to question number 2. Question number 2, do I think they're going to make more revenue and profit in the foreseeable future than they're making today? If the answer is yes, I go to the third one. Third question, can I pay a reasonable price today for the company and for that future stream of cash flow that gives me a reasonable return on my investment? Whatever that reasonable return means. Is it 15%, 10%? I don't know. That's for you to determine. That's the hardest one to answer yes to. And that should be the hardest one to answer yes to. And that's why we had a bubble, because everybody thought that they could just buy and things just went up. When everybody thought they were an expert in investing, that's not humanly possible. And that's why we teach this process. Is this process for you? Well, if some of the things I sat there and said and most said go, oh, that actually makes sense, it's probably for you. I take some more time because it wasn't, I heard it and like, okay, this makes sense, but I didn't go, I'm a believer.
Guys, if something that resonates with a lot of people, when you're buying a stock, you're buying a piece of a business. Looking at Apple, when you buy a share of Apple, you're owning a piece of that company. You're owning literally the same thing as Tim Cook owns, just in a smaller capacity. If that doesn't make sense to you, or it does, it's clicking a little bit, go watch another video.
Yeah.
These are the things you need to do, because this is exactly what you're doing. You're not buying a ticker symbol. You're not just buying something for $132 and hoping it goes up.
I will say this. For those of you who own a business or know somebody who owns a business, if you own the business today and you bought it for $1 million, or you have a business today, it's worth $1 million. And I told you, great, 10 years from now, it's going to make $10 million in profit. Do you think your business is worth less or more in 10 years? That's all you're doing with a stock. Yep. The hard part with the stock is Mr. Market every day tells you it's worth this. And when it's down here and still making more money, you have to have the ability to say, I'm okay with that. I'm okay with that. Warren Buffett says you should be able to buy a stock and be okay if the market closes for 10 years. I sit there and say, you should buy a stock and hope the market closes for 10 years. That's how you'll do really, really well. You know, I'm reading a book now about 100 baggers, and they talk about this soup can investing kind of thing, where you just buy stocks, put them in a soup can, file away, and never look at them ever again. And it's done pretty well over long periods of time in beating the market.
Yeah.
Why? Because you don't worry about the ups and downs. You don't worry about making decisions, highs and lows. You just stick with it in the long run.
Right. Like if you look at this, and Apple's down about 12% in the last month, do you really think that Apple is worth, as a company, take stock price out of it, they're worth 12% less today?
That's the thing. Fundamentally, they shouldn't be.
Changed? Exactly.
And that's the proof that things are irrational. Exactly. Now, I'm not saying Apple's worth $132 a share.
Not at all. Not at all.
I think Warren Buffett likes it.
I'm actually taking away stock price and just looking at the financials and saying, okay, did this lose 12% of its value?
Oh, profits up, revenue's up, everything's up. It's just perception's down.
Exactly.
In the market in general. And this will continue because the ETF market's so big that when people finally start selling their ETFs, there has to be indiscriminate selling where people just go, the ETF companies go, we just have to sell stocks on our redemptions. It's going to be a cycle. So it'll be a bumpy road. But again, this is the time to go dollar cost average and learn a process that works. So you need to subscribe to the channel. I talk about this in our community every single day. I post what this is every single day. I post the over, under, etc. And it's just meant as a guide. They're saying, okay, where do we stand currently? And there's other metrics that show we're only 25% overvalued. I don't know where we are. The bottom line is I follow something that makes sense to me. Thank you very much for your time, guys. Subscribe to the channel.